In this video, we are going to cover stocks that have announced that they are going to be paying out dividends. We are also going to look at some good news from two tea farms, that is Kapchorua Tea and Williamson Tea. We will also have a look at Uchumi because they had some positive financial results and we will see why that happened. We will also have a look at Umeme because some of you have asked me to talk about Umeme, so I'll just share my thoughts on that. We also have some two Kenyan stocks that are going to be listed in a global index fund, in a small cap index fund, the MSCI Frontier Markets Small Cap Index. So we will also talk about that. So let's start with Co-operative Bank. They are going to be paying out 1 shilling for every share that you own. And this is the first dividend. So it's an interim dividend. You should expect another payout next year, if not this year. So probably next year, they'll also make another payout. All along, they've just been paying out 1 dividend. A company can decide to share with you as a shareholder their profits once a year or twice a year. So for them, it's always been once a year. They just pay you out once a year. You're done in terms of cash flow. So this time, they have decided that they're going to be paying out twice a year, which is they're making history. So in 2022, they paid out 1 shilling. In 2023, they paid out 1 shilling and 50 cents, a similar number in 2024. So in 2025, they have announced that they will pay out 1 shilling plus a question mark because we don't know what the other amount will be. But it should be, my suspicion or my speculation rather, is that it's going to be more than the 1.50 shillings. It might be, or it can just be the 1.50 shillings. I've added these other columns here just to show you the returns on your investment. In 2022, the stock, like the highest price that was recorded in 2022 was around 11 shilling. So in terms of your return on investment from cash flow, that is dividends, you just divide 1 by 11 shilling, that will give you 9.09%. In 2023, the highest recorded price in 2023. So this means that you are an investor who bought this share at the highest price. It was around 15.05. So your return on investment would have been 9.97%. In 2024, again, the highest price was 15.7. When you divide that, the return is 9.55%. Now, these numbers are not accurate. I'm just giving you an overview of how to think about your investment if you don't own this stock already and you're planning to buy this stock. So yeah, the highest price that has been recorded in history was 25 shillings. Assuming that you are an investor who bought this share when you had this news, and they're going to be paying out 1 shilling, and perhaps they might pay out another 1 shilling out of speculation and just calculation, then the return on your investment will be around 8%. So yeah, in terms of their financials, they made good money this year. So let me just show you their metrics. You can see that last year by Q3, they made an income of 36.87 billion. This year, the amount was more, 45.28 billion. So the number went up by around 9 billion. So that's how they made more money this year. In terms of their non-interest income, so the interest income is the money that they make from the loans, from the interest on the loans, their main business, which is giving loans. So that's the amount that went up. In terms of other incomes other than the loan, the amount is still the same. It's around 22 billion there. In terms of operating expenses, the expenses went up as well. The other stock that is paying out dividends is Kengen. Kengen announced on 31st October that they are going to be paying out 0.9 shillings for every share that you own. This is the highest dividend that has been paid on record. Last year, it was around 0.65 shillings. So this year, it's 0.9 shillings. So let me just show you where they made the money, why they're paying out a higher dividend this year. Last year, they made around 56 billion. Allow me to estimate, and this year they also made around 56 billion. This is in terms of their revenue. So where did the profit after tax come from? You can see that this last year they made 6.7 billion. This year they made 10.48 billion. So this year they made 3 billion extra, more than 3 billion extra, around 4 billion extra there. So where did it come from? You'll see that they managed to cut down their costs, their expenses, from 39 billion last year to 35.14 billion this year. So they saved around 4 billion, which justifies why they made more profits this year. So it wasn't merely from their business in terms of revenues, but cutting down on costs. In terms of the share price, if you're going to buy it, let's say next week, I have used 10.45 shillings as the share price, although the share price has been ranging between 10.2 to around 10.5 shillings there. Then your return on investment in terms of cash flow, dividends only, you just divide the 0.9 with the 10.45 and your return is around 8.61%. And imagine this is a return that you're going to earn within a short period of time, like between 3 months. Carbacid Investments PLC also announced their dividend payout, which is, it's a final dividend of 2 shillings for every share that you own. The stock price, I'll use 31 shillings because that's the average price for that stock. Your return on investment, if you go ahead and buy this stock, is the 2 shillings that you will earn divided by the 31 shillings that you will buy this share at if you don't own this stock already. What I would say about this stock is that the company is in the business of producing carbon dioxide that is used in the food industry. So when you think about soft drinks like Coca-Cola, when you think about carbonated water, that's where they are. So it's a market that is really niche. I would say it's a slow growing stock. And another thing that I noticed about them is, let me just show you this graph here. Anything that is in green, that is their net profit. Anything that is in green, the bars that are in green. The line that is in blue, anything that is in blue, that line there shows you the dividend per share, what they pay out as dividends, as their share of profits. So you can see that as the green number keeps going up, the blue number has been going down, although now it's starting to go up slightly. And this is data from 2005 to 2025. They have been around even past 2005, so I just decided to use 2005. The point that I'm trying to drive across here is that, yes, their earnings have been going up, but they have been paying out a smaller dividend per share with time. And you'll notice that part of the profits that they are making, they are investing it elsewhere, in as much as they are deciding to not pay you more money, in as much as they are making more money. Generally, the company is growing, the company is performing well. And 2, a dividend payout doesn't necessarily mean that a company is not doing well. They might be reinvesting elsewhere, which will benefit you as an investor long term if you stick around. Some good news for Uchumi, because the company recorded 8.8 billion as profit. So when you compare to what they made last year they made losses of around 49.7 million. That was a loss. And this year it was a positive number, 8.8 million shillings. And the reason why they made more money this year, they made more profits this year, is because they attributed that to the rental income that they made from leasing out their property to China Square. And their rental income jumped by nearly 5 times, from 13.5 million shillings last year to around 62.7 million shillings this year. So it's mainly from their rental income and not their business, their supermarket business. So this is good news, but you still have to remember that the company is still, I would say it's still in financial distress, because they have debts worth 9.8 billion shillings, and they are currently restructuring their debt and trying to revive their business. All in all, this is positive news. At least they are making profits. Talking of profits, the 2 tea farms, that is Kapchorua Tea and Williamson Tea, performed well, in that Kapchorua earnings, the money that they made, jumped by 422%. And for Williamson Tea, they reduced their losses for half year 2025. So this is Williamson Tea. For Williamson Tea, remember they have reduced their losses. Last year, in terms of revenue, they made 1.986 billion. This year, they made less, 1.6897 billion. So they made less money from revenue this year than they did last year. But why did their losses reduce? Their operating losses reduced from 216 million last year to 101 million this year. So they have reduced their losses. An interesting figure that I saw was this fair value gain bio. I'll explain what that means. You can see that their fair value gain increased from 23.4 million to around 45.7 million. So that's where they made the money. A fair value gain, in this case, which is bio, means them revaluating the current market value of their assets, in this case, the bio. So we're talking about their tea plantations. The current value of their tea plantations went up. This is not cash that has been realized. This is just on book value. It's like capital gains on an asset. You don't realize it until you sell it. So this is more of a book number than an actual cash number that they made. Because that value went up, it's what made them reduce on their losses. It's the same case for Kapchorua Tea. You can see that their turnover, that is their revenue, last year was around 1.09 billion, worth 1.09 billion. This year, the number reduced. So their revenues reduced. But why did their profits go up by 422%? You'll notice that, one, their profit from operations last year was a negative number, negative 5.1 M. This year it was a positive number. So this is where the big deal is. This is where they made most of their money. So this is profit after operations. What this means is that they cut down on their costs. They cut down on their costs, on their business costs. That's why their profit from operations increased. The other figure here that is interesting is the fair value gain bio. So this is, this is the market value, the current, we call it the fair value of their assets. In this case, their bio assets, which I would say their tea plantations. That when they looked at the current value of their bio assets, it's more, in as much as they have not realized it in cash. So this is where the other change came from, and that's why their profit after tax went up by 18.2 million. Earlier on in the year, the two companies had actually issued profit warnings because of what was happening in the global tea market. But the fact that we can see some positive results here is a good indicator. The two companies that have been listed in the MSCI Frontier Markets Small Cap Index. So this is a global index by Morgan Stanley that I would say it's a benchmark for the stocks that are specifically in this market, the frontier markets. The frontier markets is the developing economies like Kenya. And specifically, we are looking at small caps. So these are companies that have a smaller capitalization, a smaller valuation. This index, an index tracks the performance of assets, in this case, stocks. So it's like there's a list of stocks there, in this case, stocks that have a smaller valuation, a smaller capitalization. When you look at this list, we have added CIC Group and Williamson Tea. So what this means is any global investor or a fund or a company that does these types of investments, and they look at this index to try and choose which stocks to invest in, they will now have an opportunity to choose CIC and Williamson Tea to invest. We will have more foreign investors coming to the Kenyan NSE market and investing in these shares. So more foreign capital coming in, more foreign investors, more liquidity in terms of buying and selling, because they will now have an interest in these stocks. And also we might see the value of these stocks go up because of active trading, especially from the international market. The other update is with regard to Safaricom. They are working on piloting Ziidi Trader. So this is going to be like a stockbroker with a touch of your button, of course, from your M-Pesa app. So this is a feature that they're working on to allow investors to buy and sell shares. I can say that this is going to be a game changer, because anybody who has the M-Pesa app and has an interest in shares will simply go there and invest in shares. We've seen Safaricom evolve from not only being a telecommunication company, but also moving into the financial ecosystem. So I mean, big things for Safaricom investors and also just investors in general who don't own this stock, but will have a chance to invest in shares. What do you think about that? This is what happened to Umeme. Umeme was a power distribution company that made a contract with the Ugandan government. I would equate them to KPLC because they also distribute electricity. But the contract that they had signed ended this year in March 2025. As a result, the Ugandan government compensated Umeme around 118 million US dollars for the infrastructure that they had, for the operations that they had there to wind up. But Umeme claims that the Ugandan government owes them an additional 292 million US dollars. 292 million US dollars that they were not fully compensated. The value that they received does not reflect the value that they have. So currently, there's a dispute between the two, the Ugandan government and Umeme, and it's under international arbitration. So they are discussing on how to resolve this. In the meantime, I see two options here. One is that they might get that compensation and wind up, like close office. So in that case, if they receive that 292 million US dollars or an amount less than that, but they're compensated, they are going to issue a payout to any investor who owns that stock. They pay you, they compensate you, and they finish business. The other option is that they can receive that money and they can restructure their business. They can find new markets and the stock will still be listed there. The other option is that they might not receive that money. In that case, they might still close down or they might still restructure their business. If that's the case, then there's a possibility that you as an investor, you might lose in case they wind up and they don't have enough capital. And see, it's a risky bet. What if they win that money and they share with you and they finish business or they restructure your business? You're good. What if they don't win? They have to wind up their business. And remember, if they do that, they have to pay off their debts. They have to pay off their creditors. And finally, they'll think about you and you might incur a loss. So that's it. What do you think?